All right. Happy Friday, everyone. Welcome to Sudozi's Finance Friday. Thanks for joining us today. For those of you who don't know me, my name is Rose. I am the CEO and founder of Sudozi. We exist to help companies grow faster, more efficiently by bringing more automation to FP&A and vendor management. Every Friday, I get to chat with a super awesome strategic leader. And today we have Scott Oren joining us. Hi, Scott.
Hey, I'm flattered to be on. Thanks for having me, Rose.
Of course. Would love to hear a little bit more of your background before we dive into it.
Yeah, so I'm the COO of Kruze Consulting. We're a startup accounting and tax firm. And my wife started our firm 10 years ago. And I started 7.5 years
Mhm.
ago as the third person. And now I think we're like 160, something like that. And 750 venture-backed clients, $10 billion in capital raise, $1 billion exits. And
No big
so that's
deal.
Yeah. I mean, it's crazy when you say it out loud, and Sudozi will be like this 5 years from now too. You go like, "Oh my God, I can't believe we've come so far." But before I joined Vanessa at Kruze, I was a partner at a venture lending fund called Lighthouse. I did that for 9 years. Did $100 million worth of deals. Did like Angie's List, Upwork, Impossible Foods, Serena Lilly, FreshBooks, tons of companies. But I jumped to Kruze because I really wanted to build something. Sometimes people don't realize like venture capital, you're living vicariously through other people, which is cool, but it's even cooler when you do it yourself. And so that
Yeah.
was the chance and the bet I took. And before that, I worked in investment banking at Hamburg and Quist, which was acquired by JP Morgan. So I did 3 years M&A in the 1999 crazy, that whole run where I think I learned like 10 years worth of stuff in 3 years. So that's my career.
Or
And
20 years.
yeah, it felt like 20 years. It felt like it. I was aged. That's when my hair started falling out in 1999. But wouldn't change a thing. And very blessed to work at Kruze. And we have just amazing people at Kruze, and the clients are. And so yeah, that's me. That's where I am today.
That's great. Great to hear. So at Kruze, it's a super fascinating role because uh, Kruze itself is a decent sized organization, and yet you're also partnering with all of these companies, and sort of you're like a mini consultant and mini, part-time CFO, or if it companies that don't have CFOs. So share a little bit about that those types of relationships, both internally and also how you see your clients having success with Kruze.
Yeah, I mean, probably the best part of my job is I get to learn from the founders, and I also get to teach them stuff. And you're right, we're a startup. Like we've been through the ringer, and anyone who's done
Yeah.
it a couple times knows. I mean, you have amazing startup experience too. You kind of get this like you know the drill a little bit. And so some of the most rewarding times for me are when I'm talking to a founder who's got a great idea and is a great person, but they just need a little bit extra guidance, and
Hmm.
that's the most rewarding part. It's also our team. Like the team at Kruze, everyone could work at like another accounting firm. They choose to work at Kruze because they want to work with startups and they want to be like deliver a great work product. This isn't like
Yeah.
a slap it together kind of place. And so I get like to teach people all these different things, but then there's many times where like I'm talking to a founder and they've figured something out about the startup journey that I don't know, or a vendor or a tool or something like
Hmm.
that,
Hmm.
that we can incorporate not only in Kruze because we're a startup, but then we can push it out to the rest of our clientele. Or I'll work with like a new accountant who joined Kruze, and they're like, "Have you ever thought about doing it this way?" And you'd be shocked at how many amazing ideas come from people who've been here for
Yeah.
a while, or even just new people. And that's really who we are. We're the culmination of all these like business processes and constantly figuring out a better way. We call it Kaizen. It's one of our core values. Um, and so that's the best part of my job. Like I love the give and take. I love talking to people. I love teaching and I
Yeah.
love learning. So that's why it's so rewarding for me.
Yeah. I mean, I've been able to follow along your journey and Kruze's journey in the past few years. It's been really incredible to watch just your growth and how you've been able to really help different companies, different founders who some are not the most financially savvy,
Yeah.
sort of, have really great books and great financials and be able to do that themselves. I asked like as you're, starting to work with a founder or a team, how do you explain like the value of finance, the value of a good accounting and good, getting your taxes done right. What's your pitch around that? And how I guess where that's going is, how can other CFOs or VP of finances also communicate that with the rest of their team?
Yeah, it's kind of simple because, the moment you raise venture capital, whether it's like angel investors or seed funds or even like a Series A, you have two obligations. You have an obligation to your investors, your fiduciary. You need to be able to report to them and tell them where you're spending money and how you're spending money. And then you have an obligation to yourself and the vision that you want to build and the way you want to change the world. And that requires knowing how you're spending money, knowing what your runway is, knowing what your cash out date is, and knowing the milestones you need to hit to raise your next round of capital. And it's all in service of like changing the world, doing something special. But if you let yourself I generally think most founders actually really they want to do that and they want to do the right thing.
Yeah.
Sometimes the ones who don't or don't take it as seriously think they can just delay it, and it'll kind of go away, or they would, they live in like almost like a little bit of a fantasy. The ones who really get it, they know that if you put this stuff in place, not just like the getting accountant and getting on your monthly financial cadence and doing your tax compliance and even like getting money back in your R&D tax credit, that stuff.
Yes.
You can, and the systems like Sudozi, then you're built to scale. And doing it right the first time, right away, you save so much headache. Sometimes I'll relate it to most founders are technical, and there'll be something called technical debt.
Yeah.
Where like when they're building their prototype, they slap it together, right? And they're accruing technical debt. Well, there's the same thing with accounting and tax and systems debt.
Yeah.
And so if you just get it right away when you start
a little bit better right away.
Yeah. And by the way, it builds so much confidence in your venture capitalists and your team. Like there's no better way to hurt the confidence of your team than miss a payroll, right? Because you're sloppy or you didn't set up a payroll system or whatever, right? There's no better way to not have VCs want to vouch for you to their other VC friends than to not be sending them monthly updates with financials and not be able to talk about the KPIs at a board meeting and where you're going and how much runway you actually have, right? So there's this giant game of confidence building that needs to happen with the employees, the customers, and the venture capitalists. And having all this taken care of makes it easy. It's like the easiest part of building that confidence. Building a product is hard. Getting customers is hard. Raising another round of capital is really hard. So why not make it as easy as possible for yourself on those journeys?
Yeah. That's fascinating. And it's a really interesting perspective because you see so many companies in this role and at Kruze.
Yeah.
You mentioned, go ahead.
Oh, I was going to say like this, and please hope this doesn't come across as promotional. This is like a real thing that happened 30 minutes ago. We have a company getting bought by a major tech company, third diligence call, and people kind of think like, oh, financial diligence. There's also a huge tax diligence. Like there's separate calls for tax diligence. And the point person, again, I hope this doesn't come across the wrong way. This is what just happened 30 minutes ago. Started the call off by saying how amazing diligence has been working with us. And like our client was like beaming, right? Like, but the client knows it's going well. But like, can you imagine being in that situation where you're working with like a professional finance team at a large tech company, and it's either just you don't have any finance support or accounting support or tax support, or you've got someone who you found on Craigslist or whatever, someone who just that's what you're building to. You can't change the world and build an amazing product without the support around you. And eventually you're going to want to get bought, or you're going to want to IPO, or you need to raise a huge round. Right. And so just doing it the right way just makes life so much easier for everybody.
Yeah, no, I can totally relate. We actually just went through a pen test and we got back. It's like, oh, there's actually like, this is great. There's not much here.
And that's because you set all the technical guidelines and the right stuff was being incorporated early on. That's exactly it. That's exactly what it's like.
Much easier to do it better from the start. It's not even that hard, that taxing, than to like get to that, you're closing the round and like, oh no, like we didn't file taxes XYZ and whatever.
And your time and the stress, like you only have so much emotional bandwidth as a founder. And I like, you know this, I know this. Like those stress hits, those stress bombs because you didn't do something or you just didn't follow a process, it over time it exhausts you. Over time, you lose that buffer, the emotional buffer you have. And this is like one of those areas where it's really easy to build a buffer up because you're just doing it the right way and you have people that you can being able to ask someone a question and get the right answer is very, very helpful. It just makes you so much more efficient. So anyways, that's why people like working with us. It's why we like working with the founders. Like the founders that take it seriously and are on point, they're a pleasure to work with. And like I was telling you before we turn the mics on, there's a huge correlation between being organized as a founder and success. It's not just like that those kind of people are successful. It's that they can get feedback loops faster. They can see in their financials that they are losing too much money or their revenue is growing faster than they thought and they need to staff up more. And having those signals coming back to you quickly allows you to be a better entrepreneur. And that's why those kind of people are more successful.
Absolutely. Speaking of more successful, I know we're coming up on time here, but if you could share a little bit about what you're seeing within your portfolio about fundraising, next rounds, general themes that you're seeing.
Yeah, seed, Series A still happening a lot. Like I would say it's cooled down a little bit. If we go back to like historically, I think people are kind of realizing this. 2021 was an insane year. I know at Kruze, we had first quarter, I think was 600 million in capital raise, 700 million Q2, 800 Q3, and then 1.7 billion in Q4. So monster numbers, right? And then Q1, I think was 800 million. So that's the capital markets went, it kind of reminded me of like 1999 or March of 2000 when the market went parabolic. And that's kind of what happened in Q4 2021. But there's still a lot of venture capital in the market. And what I always tell people is like seed and Series A, like those entrepreneurs are going to start companies. Like, and the people who are listening to this, they're like, no, they're nodding their head probably. I've been through so many cycles at Lighthouse, at Hamburg and Quist, where they're not going to not build a new product or change the world because like the capital markets are tough. They're going to do it and they're going to figure out how to raise money and survive on what they can raise and build. And so we're seeing that like there's tons of companies still getting started, tons of seed, tons of Series A. Where we see it getting tougher, which I don't think is going to be that much news to people, is B and C, that kind of like the growth capital zone where those investors are very metrics focused. And so you need to be showing growth, but probably more importantly, they've got a hangover in their portfolios. They are still triaging. They're still making sure, or doing bridge rounds. They're still making sure their companies are surviving. This is like a phenomenon that I lived while at Lighthouse. You just don't have as much time to do new deals when you're triaging a lot. And you have to look at your own portfolio first because you're a fiduciary to your limited partners. And then you kind of get everything settled and then you start looking for new stuff. And so I think we're still in that like the Series B, Series C settle zone. But the seed and the Series A folks, they just keep doing deals. The Series A folks, the other probably big change than when I was at Lighthouse is they've like Sequoia, Andreessen Horowitz, all these like major funds. I could name 20 here. I'm not discriminating. They have raised very big pools of capital that historically Series A venture firms didn't have. So they can actually support companies through a Series B, or the Series A's are still significantly higher than they used to be back in the day when I was doing it. So there's a lot of capital still going. But you got to be smart. You got to have metrics. And the one other kind of thing I can tell you is that huge increase in venture capitalists asking for financials and doing real diligence. This was like in the last half of
finance is sexy again.
It's more like covering your butt a little bit, like halfway through 2021, it was like I felt bad for the VCs. I've been in this position. They were getting like exploding offers from founders. The reverse. Like if you don't invest, give me a term sheet in the next 3 days at this valuation, I'm going to work with someone else because I already got 2 others. And that puts a lot of pressure on a venture capitalist because their job is not only to like kind of see the future, but it's to get into the best companies that will execute on that future. And so they were making trade-offs. They were making trade-offs on like how much diligence do I do versus charming the founder and getting into the deal. And now
those founders.
Yeah, the pendulum has swung back a little
Yep.
bit, so they have more time, and they can actually look at the metrics and make sure they're making a good decision. So that's definitely happening.
Well, thanks for sharing that. I know we're at time here. I could chat about this for a long time. You got so many insights to share. One last thing, what is your favorite Excel tip? Whether formula, shortcut.
Oh my gosh, you're asking.
Yeah.
I am terrible. So in 1999, I was a young investment banker and I was a whiz on Excel. And I'm going to date myself because I was a VLOOKUP person, and our people at Kruze laugh at me because everyone does index match now, and I don't even know how to do index match. So
yeah, or you can just jump ahead to XLOOKUP. You don't need to make a pit stop at VLOOKUP. You can just go ahead to
XLOOKUP. Exactly, right. But that's like that's where it stopped. I mean, I'll tell a little war story here real fast. People can't believe this, but when I was doing it, Excel was not that stable still. Like, this is hard to believe, but I would be working till like 3 a.m. and my Excel workbook would crash and I would lose like 3 hours worth of work. This happened like all the time. People don't, and I had autosave on.
You had like the floppy disk.
Yeah, because these models were so big relative to like what a PC could handle 22 years ago. It was just insane. It was insane. I don't know how I even lived through it. I remember like these long walks through the office at 3. Everything's dark. The only other people in the whole building are your compadres who are also analysts doing this stuff. Analysts. And and you just want to go like, oh my God. But then you have a meeting and you have to get back in there and do exactly what you just did. And oh my gosh. So I tell that story to the Kruze people and they just look at me like I worked in like the Stone Age or something like that. And that could never happen again because it doesn't. But so I'm sure we'll come back someday and be like, oh my gosh, can you imagine in 2022 you couldn't do this and couldn't do that?
You thought about something, but it didn't actually end up in the cell. How come? They couldn't do that?
How did the AI
still type it in? That's like close, so archaic.
That kind of thing. Anyway. So. Well, thank you so much for having me. I'm sorry to have to run. Quick plug in for Sudozi. I don't know if people have seen the podcast that you and I did, but like when you start talking about having the contracts and being able to reference the contracts within the expense management tool, like you and I
that links to your budgets
for years. Like 2 or 3 years. I was like, yes, because I can't tell you how many times over the years I couldn't find a contract or had to go digging for a contract. And so I think you're really onto something, and I wish you the best. And you're just an awesome person. So I'm looking forward to your success.
Oh, thanks, Scott. Really appreciate it. Sorry to your next meeting for making you late. We'll chat soon.
All good. Bye, Rose.
Bye, everyone.
Thank you.
Join us next week.
Bye.